The Minority Market. Episode 9. What does a stock really represent? Most people think a stock is just a ticker symbol, a moving price on a screen, or a vehicle to make money. This misunderstanding is one of the earliest and most damaging mistakes beginners make. When you don't understand what a stock truly represents, every decision you make becomes fragile, emotional, and reactive. To move toward the minority mindset, you must first change how you mentally define a stock. A stock is not a price. A stock is not a chart. A stock is not a prediction. At its core, a stock represents ownership in a real business. When you buy a stock, you are buying a small piece of a company's future, its ability to generate cash, survive competition, manage risks, and grow over time. Forgetting this truth turns investing into gambling. Most beginners interact only with the price. They watch it rise and fall, attach emotions to every movement, and make decisions based on short-term fluctuations. Price becomes the identity of the stock. This is dangerous because price is only the market's opinion at a given moment, not the underlying reality of the business. Opinions change faster than businesses do. The market exists to facilitate transactions between different participants, each with different goals, time frames, and information. Some participants are traders, some are investors, some are institutions, some are hedgers. When price moves, it reflects this interaction, not necessarily the value of the business. Confusing price with value leads to poor decisions and emotional stress. A business, on the other hand, operates independently of daily price movements. It sells products or services, manages costs, hires people, competes with rivals, and adapts to economic conditions. Its long-term success depends on fundamentals, not short-term sentiment. When you understand this, price movements become information, not threats. Another misunderstanding is thinking that owning a stock is a bet against others. In reality, it is a claim on future cash flows. You are not trying to outsmart another trader. You are evaluating whether a business can create value over time. This shift changes your behavior. Instead of reacting to noise, you focus on durability, sustainability, and risk. Many beginners ask, is this stock going up? The minority asks, what kind of business is this? That question leads to better thinking. What does the company do? How does it make money? What risks does it face? How stable is its demand? These questions build understanding rather than prediction. Stocks fluctuate because markets are emotional. Fear, greed, uncertainty, and speculation influence prices daily. Businesses, however, change slowly. Revenue does not double or collapse overnight without reason. When price moves sharply without fundamental change, it creates opportunity or risk, but only if you understand the difference. Another critical point is ownership mindset. When you buy a stock, imagine you cannot sell it for several years. Would you still be comfortable owning the business? This mental exercise filters out impulsive decisions. The minority thinks like an owner, not a renter. Renters worry about short-term price changes. Owners focus on long-term viability. Beginners often believe diversification means owning many stocks. True diversification begins with understanding. Owning 10 businesses you don't understand is riskier than owning one you do. Understanding reduces fear because it replaces imagination with facts. Fear thrives in ignorance. A stock also represents uncertainty. No business outcome is guaranteed. Management can fail. Industries can change. Regulations can shift. Understanding this prevents blind optimism. The minority balances belief with skepticism. They do not fall in love with stocks. They respect risk. Another mistake beginners make is believing that popular stocks are safer. Popularity reflects attention, not quality. Many great businesses were once ignored. Many popular stocks later collapsed. Price popularity is not business strength. Separating the two protects you from herd behavior. Time plays a crucial role in understanding stocks. In the short term, price is driven by emotion. In the long term, price follows business performance. The minority aligns time horizon with business reality. Short-term thinking applied to long-term assets creates frustration and mistakes. This does not mean price and charts are useless. They are tools to understand market behavior, timing, and risk. But without a correct mental model of what a stock represents, these tools become weapons against you. Foundation comes first. A powerful habit is to describe a stock in words, not numbers. Explain the business to yourself as if you were explaining it to someone else. If you cannot explain it simply, you probably don't understand it well enough to own it. Clarity is protection. Another exercise is separating price from emotion. When price moves, ask, did the business change or did opinion change? Most of the time, it is opinion. Learning to distinguish the two builds calmness and confidence. The majority treats stocks like lottery tickets. The minority treats them like business partnerships. One approach creates excitement and anxiety. The other creates responsibility and patience. Markets reward the second approach over time. As you move forward, remember this. Every chart you see represents a business underneath it. Every price movement reflects human behavior interacting with that business. When you respect both layers, business reality and market psychology, your decisions become more grounded. Understanding what a stock truly represents is the foundation of everything that follows: fundamentals, technicals, risk management, and mindset. Without this foundation, knowledge collapses under pressure. With it, learning compounds. This episode marks the transition from mindset detox to market foundations. You are no longer just observing your emotions. You are learning how the market is structured at its core. Build this understanding slowly and deliberately. It will protect you more than any indicator ever could. The journey to becoming part of the minority begins with redefining simple concepts correctly. A stock is not a price to chase. It is a business to understand. That single shift will change how you see the market forever.